today, mergers and acquisitions on the card. Netwealth lobbing a $785 million takeover offer for Praemium in a bid to beef up its platform for asset management. The bid consists of one Netwealth share for every 11.96 shares of Praemium, implying a bid of $1.50 a piece, which represents a 20% premium on Praemium's last close. Praemium's board, though, saying the proposal undervalues the business and is not in the best interest of shareholders, but added it would be open to engaging with the bidder. So, Gary Glover, the dance starts now, doesn't it? You don't come out and say, "Wacko, thanks for the takeover offer." You always go, "Well, it's a bit on the low side," and start to negotiate. What do you think of the bid and Praemium and Netwealth?
I mean, it's probably a good time to do it when your PE's on, sort of 70 times, and you're just a platform provider in that space there. So I think it's, to be offering sort of script is the way to go here when your company is pretty highly valued there. So, look, I've used Praemium before. It's not a bad platform. But yeah, I don't know. I think the Netwealth itself is pretty fully priced here for me. I think it's stock sort of showing topping sort of pattern type characteristics. I mean, the valuation's pretty high there. We're still on, even with 14% growth this year and another 13% growth factored in for the following year, we're still on 60 times sort of, 23 type earnings there. So might be buying a little bit of growth there, but and these multiples there, I just couldn't be buying the stock here. I think it's fully priced, but good time for Netwealth to be making a move with a script bid.
Yeah. Howard?
Yeah, I mean, when you look at the business of Netwealth, putting aside the fact that it's an absurdly high PE, as Gary points out, the business is doing really well. It's got, as one would expect in financial services like this, very high return on equity. I mean, the return on equity is in the 50s percent-wise. It's got no debt to speak of, and it's growing its earnings at 35% plus a year. Now, that's absolutely wonderful as a business, but then as Gary points out, it's on a very, very high PE of 77 or so, according to our backward calculations. We always take the PE of the last reported actual earnings. And the bid they're making for Praemium is at an even higher PE. I mean, they're paying a PE of over 100 for Praemium. So it won't even be earnings per share accretive in the first year, on the assumption that there aren't significant synergies. Now, there may be synergies, but wow, on behalf of any Netwealth shareholders, I'm not one, and I don't think there are any in TeamInvest. It hasn't been listed long enough. But I hope they don't get in a dance where they'll end up paying even more. But they have so far said they're definitely not prepared to increase their offer. It's a one-time offer. But certainly if this offer goes ahead, I'd say the Praemium shareholders are doing very well out of it.
Yep.
But like Gary, I wouldn't be buying Netwealth at these prices.
Yeah. Been a huge success story, of course. Matt Heine from Melbourne, with his dad, Michael from Melbourne, the old Heine trading business that has lots of different arms. Almost started as a side hustle for Matt as son goes off and starts his own business, done incredibly well.